InFi, episode 13.
Welcome to InFi, the future of finance, hosted by American economist and author Dr. Robert Murphy. Each week, tune in for dynamic discussions with business pioneers about emerging trends in finance, life insurance, asset management, technology, and more. Now, let's talk the future of finance.
Hey, everybody. Welcome back to another episode of the InFi podcast. Today, my guest is Samson Mow, who is the CEO of JAN3, a Bitcoin technology company focused on accelerating hyperbitcoinization. Samson's best known for his work with El Salvador's Bitcoin initiatives and his efforts at nation-state Bitcoin adoption around the world. As one of the top executives in the Bitcoin ecosystem, his expertise spans from running one of the largest exchanges and mining pools when he was the COO of BTCC, to guiding the development and deployment of Bitcoin infrastructure as the CSO of Blockstream. So our conversation focuses, as you can imagine, on what he's doing specifically with his companies, but then more broadly, his efforts to get nation states to adopt Bitcoin as their official monies. One note before we just dive into the interview, I just want to clarify my approach to these interviews. I want to give a platform for guests that we at Infineo find interesting or informative to educate our listeners, to just provide a perspective that we think is interesting and informative. And to that end, I typically am not going to debate guests if I disagree with them on something, okay? So I just bring this up because we recently had Lynn Alden on and now Samson as well. And certain people in the Bitcoin community have a definition of money that differs from the one that traditional economists would give. Okay, so if Lynn and Samson, might say things like, "Oh, money is a ledger," or "it's energy," things like that. Okay, so I understand where they're coming from, and I want you to hear their perspective. Me, a professional economist trained in the old ways, I would say, "Oh, money. The definition of it, it's commonly accepted medium of exchange." Okay, so I'm just pointing out that when we have guests here and they explain their perspectives on certain things, whether money or financial assets more broadly, it doesn't necessarily mean that I or the other people in Infineo agree with every single little thing they say. Obviously, we're just fostering interesting conversations. So without further ado, here is my discussion with Samson. Samson, welcome to the InFi podcast.
Thanks for having me, Bob. It's great to be here.
So maybe if you could just, for the benefit of the listener, just give a brief introduction to yourself and, how did you get to be the CEO of these two particular companies that are both involved in, I guess blockchain is the one common element, but if you just explain a little bit about what you do at Pixelmatic and JAN3.
Sure. I'm the CEO of Pixelmatic. It's a game development company that's working on an MMO strategy game called Infinite Fleet. We're incorporating some tokenized assets into this. So the primary game currency, which is a player currency, is issued on the Liquid network, and the ships are NFTs as well. And we designed it that way so that players could form atomic swaps back and forth, basically removing trust from that equation. I'm also the CEO of JAN3. It's a Bitcoin technology company focused on nation-state Bitcoin adoption. And what that means is we do work with governments, politicians to advance Bitcoin understanding and hopefully get countries adopting Bitcoin as a currency or as a reserve asset or any number of other possible strategies that can benefit them in the long term.
Okay, well, great. So I think probably the way this conversation is going to go, I'm going to ask you a lot about Bitcoin and your work at JAN3. But before we jump into that, can we just dwell a little bit on what you were saying about Pixelmatic? So can you just elaborate on the trustlessness? So is there a problem right now with other games of this nature and that you guys are solving with your novel approach?
Yeah, so most games don't have a tokenization model. So it's just all in a database. So as a player, you can play the game. You can get banned for a number of reasons, or you can lose your account for other reasons. And there's also interesting things from a player perspective, like you might have a guild with a shared treasury, for example, in EVE Online, and someone might infiltrate your guild, get access to that, and loot the guild treasury. But because we issued the currency on liquid, it is effectively a crypto asset like Bitcoin. So you can store it in a multi-sig wallet. You can have different permissions. You have bare custody of your digital assets in the game. So I think it's a bit of a, no pun intended, game changer for players. As a MMO player myself, I think it's very interesting.
Okay, yeah. So I guess it's just I never got into that since I was too busy in grad school, and then I just fell out of that realm. But I did a lot of computer gaming when I was younger. I'm not trying to say that I wasn't involved in that, but so you're saying that for all the reasons, quote, like in the real world, people might be interested in having blockchain based assets that carries through even into the gaming world, and the fact that you got to trust other people with other games that occasionally comes up, whereas I think people who are playing those games might not even realize that's a thing.
Yeah, so I mean, you have to trust the game developer or operator at the end of the day, but this just gives you optionality because your assets can be tokenized and digital, and you can hold it yourself in your own wallet. And it depends on how far we can go with it. But if we could, in theory, tokenize other assets like iron ore, copper, or things that you mine in the game, and let a fully tokenized economy emerge from that game, which would allow for free-flowing movement of these assets and trade between players and conversion potentially into real-world assets like Bitcoin or fiat monies. So I think it's a cutting-edge project that we're trying to advance the state of the game industry. Because right now, a lot of game companies, they see the scamminess of NFT projects because a lot of them are, pump and dumps and trying to fleece players of their money. But I don't think we've yet seen an economy that's built up just through player initiatives organically with that tokenization model. So I think something interesting can emerge from this, in which you have an economy that's really player grown and player owned.
Okay, great. Why don't we switch to your efforts in the real world regarding Bitcoin in particular? So do you maybe want to just make the case first? Well, why don't we start, I guess, with El Salvador? Is that the obvious place to start? So for the benefit of listeners who maybe they saw a headline or they've seen people loot, but they don't really know exactly what happened. Can you explain what the situation is in El Salvador?
Right. So we worked with El Salvador early on to pass their Bitcoin law. And then we also advised them on their digital securities law that would allow them to become what they hope to be the Singapore of Latin America. So a financial center with digital assets like securities issued in their country and regulated by their country. And I think they've recently just set up their regulator. So that is moving forward. But basically, El Salvador transformed itself by adopting a Bitcoin strategy. And they've seen a lot of success from that, from their traditional bonds rallying in the marketplace, their credit rating being upgraded to a B minus, and just general increase in investment in tourism across the board. And I think their GDP last year increased by double digits. So they're doing quite well for themselves. And it's really because they've taken a longer term approach to nation state development and trying to build prosperity for everybody involved.
Now, what specifically did they do? Did they make Bitcoin legal tender?
Yep. So they did a lot of things. They made Bitcoin legal tender. They've added Bitcoin to their balance sheet, so as a treasury asset. They've also started mining. They started mining with their national utility first, and then later on they did a public-private partnership called Volcano Energy, which has attracted $1 billion of investment from people like Tether and other investors in the space. So they're basically pushing forward on all possible Bitcoin adoption paths. So Bitcoin as a legal tender, Bitcoin as an asset, and mining Bitcoin.
Okay, so is that the sort of thing, like if, let's say, some government around the world, and obviously don't need to disclose anything personal or that's proprietary, but can you just give us an idea? Like, let's say I'm a government official, like a low-level official in the treasury or somewhere, and they say, you know what, we see El Salvador, we see this guy, Samson Mow, on various pockets. Go talk to his people and just get an idea. What are you gonna, if I come to you and I'm somewhat skeptical, but yeah, our country is second tier in terms of the economic growth and whatever, we're worried about bank panics and things, and so what are we doing? Like, you maybe just starting from scratch just to make the case that what would you say to such a person?
Well, I think we will just talk to them about the opportunities that Bitcoin presents to them. So if you look at the world, most of the global south countries that are still developing, they are actually decently rich in energy. They just have no ability to monetize that energy. So if you look at just geothermal potential, number one in the world is Philippines, and it's not the wealthy nation yet.
Mhm.
Then number two is Indonesia for geothermal. But if you go down the list of energy potential, a lot of these countries have massive amounts of energy. It's just not in the form of oil. So if you're the UAE or Saudi Arabia and you have oil under your feet, you can dig it up, put it into a barrel, and sell that to somebody else. But if you have geothermal potential or hydro potential or anything else, you can't really do anything with it except for sell it to a neighboring country if you have excess. But what Bitcoin does is it allows countries to monetize that, to mine Bitcoin with their excess energy and effectively take that money, sell the Bitcoin if they don't want it. They should keep it, but they can sell it if they want,
Mhm.
and build roads, build airports, build hospitals, do whatever they think is valuable to develop their country. So it's opportunities like these that I think are interesting to politicians with goals on a longer time horizon. So the challenge, I think, with politics and governments is they're very short-sighted. Everyone's working on a 4-year time horizon because that's all you've got, and maybe one election or two. But I think with Bitcoin, it changes the thinking that you have to build for the next 100 years or several hundred years, because in 4 years, it's difficult to accomplish that much. So I think this alignment of incentives and this opportunity to lift themselves out of that poverty is a big draw for politicians around the world.
Okay, so let me just try to translate what you just said there and tell me if I'm getting the spirit of it correct. So the idea is there are plenty of places around the world, you listed a few, where they have the ability to have a high capacity of electrical generation, but it's not necessarily, they don't have a huge city sitting right there that could just, absorb whatever 20 gigawatt of energy right away. And so they might say, well, what's the point, of having international investors come in here to build that because we don't have the industry to go with it. And then you're saying, oh, but right now there is something, like, rather than building it and then powering up a bunch of batteries and then trying to sell the batteries, that's just not very cost effective. Instead, you can effectively translate your domestically produced electricity into mined bitcoins. And
Yeah,
that's the way you turn your electrical potential into revenue. Is
exactly.
that
Yeah, I would say that's an accurate summary. And most countries do have excess. So Indonesia, I think they have a few gigawatts of excess capacity. And they just need someone to come out and say, we embrace Bitcoin and we want Bitcoin mining companies to come in. If you have untapped potential, you could issue an instrument like a Bitcoin bond, which I helped design for El Salvador, to raise capital and take that capital to build out a hydro dam or build out a geothermal facility, and then mine Bitcoin to pay the coupon on that. And well, the design I had was 50% would be invested in Bitcoin holdings and held
Mhm.
for a 5 to 10 year period. So that appreciation of the Bitcoin holdings there could actually eliminate debt on a lot of these countries that are in the developing world, and they could be debt free in 10 years.
Okay, great. Can you speak to it a bit to, like, suppose more and more people started embracing that, how far could that be pushed? Like, is that something like, yeah, there's low hanging fruit for the first 5 countries that do that, but then the industry would be crowded, or is it not like that?
Yeah, I would say probably 5 to 10 countries can take advantage of the low Bitcoin price right now and achieve something very spectacular by adopting a Bitcoin strategy soon. After that, the ability to get outsized returns or asymmetric returns is probably going to diminish as more and more come on. Because right now, there's still an opportunity to be a first mover. El Salvador is number one, but no, the slot number 2 and 3 and 4 are still open. And I think the countries that take that opportunity will become global superpowers in the future.
Now, does this all tie into, my understanding is you've made a prediction, and so obviously tell me if you still agree with this or if you've changed it. that you think Bitcoin's going to hit 3 million US dollars within the next 10 years. Is that accurate?
Well, that's based on some projections we did in analysis, which is the median average. So it's like 60% increase year over year, which brings us from, I think at the time we modeled it, it was probably sub 30K. So in 10 years' time, it's about 2.9 million, maybe 3 million. And that is a very conservative estimate. I think what is lost on a lot of people right now is that it's not that Bitcoin as an asset is appreciating. It is the conversion of a fiat economy into a Bitcoin economy. And that is very transformative. That's why I think 3 million in 10 years is still very conservative, because it's not that people are investing in Bitcoin. It is the displacement of everything, the legacy financial system, all the current bonds, all the current debt, all the fiat monies, M1, M2, with Bitcoin as a standard for money. And I think that is the opportunity that these countries are looking at here. It's not about investing into Bitcoin and maybe 2xing, 3xing, and making a profit. It's about being on the foundational ground level of transformation of money for the planet.
Okay, so it's fair to say that you think that would, A, you think it's happening, and B, you think it'd be a good thing that if basically human beings, the globe over, generally transition into using Bitcoin is the primary form of base money. Is that an accurate way of putting it?
I would say so. If you look at it, the fiat system is really looting human progress. So we have technology, and we've been creating it and advancing our technology for hundreds of years. But if you look at where we are today, we're not very far ahead. Like, there should be flying cars and more interesting, cool things, but we don't really have that. We have Netflix and entertainment, keep you sedated. But I think that is a symptom of the money being degraded over time, because you can't invest fiat money and build things. If you look at the construction of let's say cathedrals in the past, or churches, they're just monumental, beautiful pieces of art. And the cost to build that today would just be astronomical, to the point where you cannot build it. And if you look at the US infrastructure, the roads, bridges, railways, they are all crumbling, because the cost to build and maintain that has also become astronomical. So with the money supply degrading as it is, it just becomes difficult and maybe impossible to build things anymore. And this is why we have to fix the root of the problem and get rid of that imperfect, dysfunctional money and replace it with sound money that you can build on. I think deflation is a natural part of the evolution of economies and of money. It should not be inflationary. It should be deflationary, because technology is deflationary.
So I know exactly what you mean by that, but I just want to make sure some of the listeners aren't confused. So you have in mind there that, like with Bitcoin, for example, there's a hard cap of 21 million units that will ever be mined. And so, as we start approaching that, it's as real GDP growth continues, there's more goods and services being produced year after year. If there's just a fixed quantity of the base money, then the price of things measured in Bitcoins is going to go down over time. And that's what you mean by saying it's inherently deflationary?
Yes. So with Bitcoin, you can invest and create new technologies. So with Bitcoin, you get flying cars.
Okay. and the price of the flying car comes down year after year.
Yes.
As opposed to the price of cars that we think of that gets more expensive year after year. And again, I mean, this is basic stuff, but just in case someone's never heard it, look, with US dollars or euros or what have you, they keep making more of them, and the rate of the increase in that is typically higher than the rate of increase in terms of the real things. And so that's why the price tags keep going up. And your grandpa says, back in my day, that only cost such and such. That's not a fact of human nature. That's a fact of government-issued fiat money.
Well, that's also a very interesting point you bring up, Bob. Like, people seem to be okay with that. It's normal now. You see news and it says, this car cost $1,000 30, 40 years ago or something like that. Or a house was this much, like 70 years ago. And now it's like 1 million, 2 million. And people just think that's normal. That's actually not normal. That's the erosion of the money. It's the money becoming worthless. But it seems to be happening at a just right pace where the frog is in the pot and it's being boiled, and it kind of feels the water is getting warmer, but it's not ready to jump out yet. But I think we're getting close to that point at which the people are going to start understanding. Because I've just been seeing more and more of these TikTok videos and things pop up where people are complaining about how hard it is to make a living and how it's impossible for them to buy a house anymore. So I believe people are starting to wake up. I'm not sure what you think, but that's my sense.
Oh, yeah. I generally speaking, people are much more informed now. I mean, a thing that I like to refer to a lot is that, at least in the United States, like the Federal Reserve used to be this real boring thing that nobody cared about. It was in the background. And then it was only after the financial crisis in 2008 and the Fed started doing what we called quantitative easing that Ben Bernanke had to get trotted out in 60 minutes to assure everybody, oh, don't worry, it's not going to be inflationary. We can turn it off like that. So that was unusual that before the Fed chair never had to come out on national television to get people to settle down. So yeah, I do think more and more people are waking up to the fact that something's kind of screwy. And just like I think Uber and things like that challenge the government handing out medallions for taxi cab drivers in a way that a guy like me writing a free market economics article wouldn't have moved the needle. Likewise here, to get people to realize that you don't necessarily need the state to issue the money. Bitcoin did that immediately, that more and more people could see this thing in operation. Oh yeah, that digitally issued thing is certainly not something that the state is taking care of, and yet that could displace these other currencies.
Mhm.
It's funny too, Samson, you mentioned about the cathedrals and whatever. Another element maybe tying into what you're saying is that for some of those projects, the people working on them knew that this thing's not even going to be, I'm going to die before this thing is finished. Like that was in terms of like the long-term thinking that people had, is they would start projects knowing that it's going to be future generations that are going to actually see the benefits of this. Whereas now, like you say, it's like the idea of someone building a building and is even going to be here 10 years from now is, it's not obvious. So it's just amazing that the change. And I think you're right that among other things, it was the debasement of the currency that's partly leading into that change in time horizons, I guess you'd call it.
Yeah, but it's interesting how Bitcoin can fix a lot of these things. I think at a very fundamental level, Bitcoin is tied to Bitcoin mining, of course. And Bitcoin mining will drive innovation in energy production. So we've seen a stagnation in our ability to develop new technologies for energy, specifically in nuclear. And in nuclear, between fission and fusion. But my theory is that we're going to see Bitcoin mining drive advancements in nuclear fusion technology, because there is a hunger to get more energy to mine Bitcoin. And I think as Bitcoin price appreciates, you're going to have Bitcoin mining companies, which are now going to be synonymous with energy companies, start to invest into fusion tech. And I think fusion is the best chance for us as a species to survive. Whether you think climate change is real or not real, you cannot deny that we need to have energy to maintain our own environment, right? We need to be able to cool ourselves if it's too hot, or heat ourselves up if it's too cool, regardless of which way you think it's going. Like, having that energy is a guarantee of our survival. So in many ways, I think Bitcoin is going to advance civilization, and it's going to get us to a better place, because a lot of people seem to have forgotten what energy is and why energy is important, because they've lived in a very comfortable life where they are accustomed to having lights on and that hospitals have consistent power, right? But for people in the developing world, it's very different. And it is different because they don't have a reliable energy grid. They don't have enough energy or electricity, and they don't have access for sure. So it's people living in this coddled environment that seem to have lost the plot. But Bitcoin will force them to relearn that, and that energy is a net positive for human civilization. It's not an absolute requirement for human civilization.
Okay, so that's interesting. So, and I'm glad you brought that up because it sort of anticipates. I was going to ask you, I know a lot of critics of Bitcoin, particularly those coming from a climate change perspective, are going to say, oh, look at this is crazy that these so-called mining operations it's computers running through all kinds of calculations in order to mine the next block on the blockchain. And it uses a lot of electricity, and it's sort of like an arms race that just as more and more mining rigs enter the system, that's like increases the difficulty of the problems they have to solve. And so it's sort of just each all these different things using more and more electricity. It's not advancing humanity or anything. It's sort of like a counterproductive thing, and it causes all these emissions for CO2 and whatnot. And so if I'm understanding, you're saying by monetizing it, like you're actually giving a financial incentive for people to develop better ways to create electricity, in particular ways that don't happen to emit CO2.
Mm-hmm.
Okay.
I think so.
Do you have it? It's fine if you don't. I'm just wondering, like, do you have? Because I know some people too. They say like, oh yeah, we prefer like proof of stake over proof of work, and that there is a sense in which it does seem like a big arms race. And isn't there a way we could somehow retain the benefits of what Satoshi gave us with Bitcoin, but without all this seemingly wasteful use of electricity?
No, because you have proof of stake already. That's the Federal Reserve or any central bank. That you have that system ready.
Mm-hmm.
Ethereum just made it into a blockchain and profited off of it. But that system has existed from the dawn of time. It's basically people taking control of a money supply, being able to manage it and to manipulate it. And we've had that already. Proof of work requires an energy input. It requires real resources, real effort, and that cannot be faked. And that is the whole point. But in general, we need better critics, because the critics of Bitcoin on the dimension of energy are very weak. It's always like, it uses too much energy. But the question really is, what is too much energy? It's just too much energy because you think so? Or do you have a mathematical, quantifiable model for how much energy Bitcoin should use? And the answer is usually no. And also, most environmental critics never talk about methane, which to me just makes me dismiss them outright, because they only talk about carbon. But Bitcoin is a massive environmental technology that protects the environment, because we can also remove massive amounts of methane emissions through mining. So the fact that they cannot get over this mental hurdle to look at what is factually being done just shows me that we need far better critics than are available.
That's true in many areas, I think. So what about those, someone, again, not like a hostile critic, but just somebody who loves Bitcoin, but says, isn't there an issue with the transaction limit? And how could Bitcoin function as like the day-to-day money in a certain country, given the transaction limit? So I think I know what you've talked about, but just for our listeners, how do you address that?
Right. So the energy that Bitcoin uses is to maintain the base layer, the Bitcoin chain. But above that, we can have layer 2 solutions like Liquid, which is a Bitcoin sidechain, or like Lightning, which is basically Bitcoin transactions without a blockchain. So not everyone has to maintain a copy of every transaction, which is the base layer. And these two technologies allow Bitcoin to scale to planetary levels. So countries can use Bitcoin as a payment method. They can pay with Liquid, with Lightning, or just use Liquid to rebalance Lightning channels. This might be over the top for some of your readers, but basically you need the integrity of the base level, or not readers, viewers. You need the integrity of the base level. And then you can do other things that have trade-offs in trust. So Liquid has trade-offs. It's not as decentralized and as mutable as Bitcoin. Lightning also has trade-offs too. It's not as stable, but you gain throughput. So as long as you have the foundation that's solid, you can build a skyscraper on top of it. It's really crazy to think that people still believe that in this day that Bitcoin transactions are limited, because it hasn't been the case for the last 7-8 years.
Okay, great. So again, just like, for example, the Lightning, is this a useful analogy to think about it, that like you can imagine gold bars, like if a country used gold as its money, you could have gold bars sitting in vaults somewhere, and then people, when they go to buy a cup of coffee, might hand over like a piece of paper that is a claim on a fraction of the gold bar somewhere. And so it's not that people are walking around with backpacks full of solid gold and in exchange and having to shave off a little bit to give to the guy to get a cup of coffee. And yet the gold itself still would be the underlying base money in that little hypothetical world. Is that a way of thinking about how Bitcoin could work when you're talking about like layer one versus layer two?
Definitely. I would say, that's basically what you just described the origin of fiat money, right? It's just a IOU on a gold bar in a vault. And that's because gold is defective. It's too heavy and it cannot really scale for payments, right? You can't bring a truckload of gold bars easily somewhere, right? Or even move it across the ocean. That's very expensive. So that's why it ends up in the vaults and you have paper claims on that, which you can use as a gold layer two. But as we've seen through history and lessons, that doesn't work because anytime someone has control of the base layer, the second layers become affected or degraded. So in case of gold, it could be not there. Maybe it's not in the vault anymore. Maybe the guy sold it or the gold is lead. You just have no way to verify. So this is why Bitcoin is so transformative because those gold bars in the vault are in your own personal vault in your head. And you can verify it on your own without having to melt the gold down. You just run the Bitcoin software and you're done. And this is why Bitcoin is so amazing because it solved that problem for old money, which is gold and fiat as a layer one and layer two.
Okay, yeah, great. So you're explaining why, in your view, Bitcoin is a better money for the computer age than even gold was. But I'm just saying, as far as like, what do we mean when we talk layer one and layer two, and that they're again, so the Lightning, like in other words, how can it be that Lightning allows for transactions that aren't settled on the ultimate blockchain? Is it because, in a sense, is it the right way to think about it, that it's claims on Bitcoins?
No,
or okay,
everything still settles, and it settles cryptographically. So you have the assurance that it goes back down to the base layer at the end of the day. Any layer two will still settle on Bitcoin, whether it's liquid or Lightning. It still needs to make transactions on the base chain.
Okay. I know well, tell me if this is correct, that you have been pushed back a little bit on some, in terms of like people talking about DeFi and maybe some of the decentralization themes involved there. Am I getting your position correct?
Well, the thing is, most of the DeFi stuff is not decentralized at all, and most of it is not very meaningful. So the question to ask really is, what are you trading in DeFi? They're just tokens printed by some guy in the basement. And they're like dog tokens, fruit tokens, food tokens. That's DeFi. So that's not really sustainable once people start thinking really critically about what it is. They're trading a bunch of garbage against other garbage.
Okay, so it's not that you have a problem with decentralization. What you're saying is there are a lot of people who throw those terms around, but when you look into what actually they're advocating, it's not true decentralization. Is that right?
Well, they're not really decentralized. A lot of cryptocurrency projects are not decentralized at all. They're basically companies, VC-funded companies that say they're decentralized. Like Solana is centralized. Ethereum is centralized. Most of the things out there, of the 20,000 coins, are decentralized things issued by some guy, and they say they're decentralized. And they might set up a Swiss foundation somewhere and say, yeah, we're not managing it. It's at Swiss Foundation. But at the end of the day, it's still centralized. It's still some people dictating their own quote unquote monetary policy and printing money to sell to the unwitted retail market.
Mm-hmm. Okay, great. Can you speak a little bit about the potential for using blockchain in order, like, as a fundraising mechanism?
Well, the blockchain is just a transport rail, and I think it can be orders of magnitude more efficient than traditional rails. So if we just take an example of the Bitcoin bond that Salvador had announced before, it was supposed to take in payments from a number of options. So you can pay with Bitcoin or with liquid Bitcoin or liquid on USDT on liquid. But the key, I think, was the issuance and the payout model. So the issuance would also be on Liquid. So that's using Blockstream AMP, which is a way to manage security. So you can still have a whitelist and KYC. But the payout would be also on Liquid in USDT. So you're able to do far more efficient operations, because typically traditional bonds, the minimum size might be $1,000 or tens of thousands, if not millions of dollars. But with this issuance on the Liquid chain, the Liquid blockchain, you can allow people to invest smaller amounts and still get their dividends paid out, which it could be like $6 a year. If they've invested $100, they might get paid out $6. Can you imagine paying out an investor $6 in the traditional bond market? That's just too much overhead and complexity for the legacy system to maintain. So there are benefits, I think, to using technologies like Liquid. The key is that Liquid is not, there is no coin involved. It's just a federated blockchain. And it makes no claim to be fully decentralized and anyone can access it. It is a federation of Bitcoin businesses and Bitcoin companies that operate it. But that chain allows for greater efficiencies in capital markets to come about.
I guess this kind of ties into my next question of just in general, the idea of tokenizing real world assets, like taking conventional whatever, real estate bonds, infineo, or we're using life insurance, and putting them on the blockchain. Do you have any thoughts on that, just as a general principle?
Yeah, I think the general principle you should take is that you should not issue these things on a blockchain that could potentially be deemed a security by regulatory agencies like the SEC. So there's a lot of, I guess it's less than the DeFi push. So most blockchains have some DeFi component to them, or they're trying to say that they have a DeFi ecosystem. But some of them will also say we're doing securities. But you can't really issue a legal registered security on a platform that itself may be an illegal security. So, for example, Ethereum, they basically fundraised, sold their token, and it's got all the right hallmarks of a security itself, even though no one's gone after them yet. So maybe it's a bad example. Maybe you can take something else like Solana. That is a security. They basically raise money through a token sale. So if you were issuing a security on top of Solana, you're probably going to have some problems down the road, because the base layer that you're operating on is a security itself, or an unregistered security itself. So if you want to do something with the blockchain and issue something, I would say pick one that is not a security. So for Liquid, there was never an ICO or a token sale. It was just a side chain, which allows you to peg in Bitcoin and peg out Bitcoin and issue assets. It's clean. So you can issue a security token there. You can issue insurance or whatever you want. I think there is a company in Mexico called Millionaire. They've issued $200 million of promissory notes on Liquid as well. And their line of thinking was basically, as I outlined, you don't want to pick a technology that the SEC is going to come and shut down or deem a security in the future.
Okay, and so I imagine, though, that you think that is a trend that we're going to see continuing in the future as more and more of these real-world assets are going to be put on the blockchain?
Well, they'll be put on something.
Okay.
I don't think blockchains are necessarily the future. I think you want a similar cryptographic proof technology without the blockchain, because the blockchain is a limiting factor. And there are companies out there working on other technologies. So I think the Tether group is working on technology called hole punch or pair credit that would allow you to do something similar with a blockchain where you can issue assets. But there is an issuer. So at the end of the day, you're trusting an issuer. So I saw in your show notes, you wanted to talk about the Blockstream mining note. So the Blockstream mining note is a security. It's issued by Blockstream. So it's okay if you have it on a technology that where Blockstream is the arbitrator of the ledger, right? So I think that is the direction we're going in. And also technologies like RGB, that's also another Bitcoin layer 2 that's focused more on programmability and asset issuance. So it's things like this that are probably going to drive forward. Technologies that give you the same experience and bearer control as a blockchain, but without the chain itself.
Okay, great. Can you maybe just, both for me, but also for our listeners too, maybe just elaborate on some of these distinctions? Because I think maybe, you're making a distinction in the use of a certain term that like maybe other people, they would group all these things under the same label, and you're trying to try to separate them out. Maybe I think maybe that's partly what's going on. So can you you get what I'm saying? So for example, like maybe just to use the Blockstream mining note, just if you can walk through more slowly what that project is, and then the sense in which it uses the same technology, but I guess you're saying you wouldn't call that using blockchain?
No, so the Blockstream mining node is issued on Liquid, and
Okay.
Liquid is a chain. So there is a block every 1 minute, and
Okay.
Bitcoin's blockchain is every 10 minutes. There's a block generated.
Okay.
But there are technologies like Lightning and other things that have no blockchain, and that is the key to high throughput. So maybe securities will still be on a chain, because if you're trading securities, you need settlement, not throughput. So you want an assurance that the transaction doesn't get reversed. So maybe securities will stay on chains like Liquid, but other use cases like game currencies, stable coins, or other things that want high throughput, those will exist on RGB or pair credit, or things that have no blockchain, because the blockchain is the limiting factor to throughput, because you have to have a block every certain time. Whereas these other technologies, they settle periodically, and they are not bound by that constraint of having a blockchain with a block size and a block time. Does that make sense?
Yeah, I think so. I guess one final question for you. Can you, given the work you've done with talking to various, again, your project is trying to get various nation states to embrace the use of Bitcoin, or at least to make their jurisdictions more Bitcoin friendly. Can you speak to like some of the issues you're encountering? Like in other words, to true believers, this makes sense and everybody should be doing it by next Thursday, and yet that's probably not going to happen so immediately. So can you just speak to like what some of the issues are and what the roadblocks are?
Yeah, I would say there's two main issues. The first one is that there is this conflation between Bitcoin and crypto.
Okay.
And it's very different. So I've kind of touched on this as we talked, but crypto, for the most part, is centralized. It's companies basically masquerading as decentralized networks. They're all companies. There's people there. They're running the companies. They have investors. They have VCs. So that is not Bitcoin. Bitcoin was released. These things are launched. Bitcoin was published as a white paper. Software was released. It grew organically. Nobody controls it. These things are all controlled. But in the eyes of many politicians and governments, they're still far behind from where we are, and maybe your audience too. But they don't understand that these are different. So in fact, if you remember when FTX collapsed, a lot of the conflation was like, oh yeah, Bitcoin, FTX collapsed, right? Bitcoin price was impacted by the FTX collapse, but there's no connection between it other than Sam Bankman-Fried sold Bitcoin that belonged to his customers and drove the price down. But a lot of people still think it's the same thing. It's Bitcoin and crypto. And it's a disservice done by a lot of people in the space, like Coinbase CEO Brian Armstrong. He loves using those terms interchangeably. But for Bitcoiners, we always try to be clear. There's Bitcoin and there's everything else. So that is one bottleneck, I think. The second bottleneck is just the concept of risk. So people still believe Bitcoin is risky. And that is just a preconception I think they have yet to work around. If you look at a lot of the stocks, they're very volatile, but like countries, pension funds, institutions still invest in stocks, but they are very volatile. If you compare Bitcoin to some of the NASDAQ stocks, it's actually more stable. So there's just this preconception Bitcoin is volatile. But I don't think they understand that the volatility is really to the upside. If you zoom right out, Bitcoin is just a continuous green candle up for 14 years. So it is volatile, but it is trending upwards and very consistently. But I think generally people just have to understand that risk is not what you think it is. And we've seen this because I've talked to some pension fund managers, and the initial reaction is, well, yeah, we don't touch Bitcoin because it's a high risk asset. But then they're not really thinking about what risk is. They're not analyzing. And if you're not analyzing, you're basically doing zero risk assessment, because the whole point of doing risk assessment is looking at things on a daily basis, at least, and seeing what is risky. And Bitcoin is definitely not risky at this point. We have 10 ETFs that are filed. We have countries adopting Bitcoin. And we see massive demand on Bitcoin buy side, as well as hash rate going through the roof, which means mining companies are investing heavily in Bitcoin. So sometimes you can't really help people because they just have it set in their minds that Bitcoin is risky. But if you are doing due diligence and you're worth your salt as a risk analyst, you should understand that Bitcoin is not risky at all.
Okay. I guess, sorry, one more question just related to what you're saying there. Is there any issue that you foresee, whether someone like explicitly verbalized this or just in terms of what you think? I could imagine one stumbling block to certainly the larger governments going all in on this is that, there's a sense that there's a reason that a lot of libertarian types like Bitcoin is because it, as you said earlier, like it limits the ability. Governments can't debase it the way that they use with their own fiat currencies. And so is that a reason too that a lot of powerful governments at some level are going to say, well, no, we don't, Samson, we don't want to listen to your advice because that limits our ability to inflate?
Yeah, that's one element of it, but I think there's more than just that. The other element is, I would say a lot of people have just forgotten what money is. They think they know what money is. They think it's dollars at the central bank, but it's not money. That is just a poor form of a derivative of money. But they've gotten entrenched in the position that they have to defend that. But actually, the more they try to defend it, the worse it becomes because they've turned money into a surveillance mechanism. Right? This is why we see things like CBDCs rolling out, because they think that they can protect borders, protect people by surveilling people. And nobody wants to be surveilled. Money is simply a transport mechanism for value, right? It is human time and energy. It's a ledger that doesn't really exist anywhere. This is why Bitcoin is so perfectly aligned with the fundamentals of money, because Bitcoin also doesn't exist anywhere. It's just out there and people run the software to access it. Much like money, right? There is no such thing as money. I make something of value, I sell it to you. There's economic value there, right? We might have traded, but money doesn't actually exist anywhere. So I think the challenge is they've tried to take money and make it a thing, but you're trying to bind something that does not exist into something that is physical and can be corrupted and manipulated, like, for example, gold. So understanding of money is one blocker. But yeah, the other thing is just they do want to control money, right? Because they've gotten used to it. So they don't necessarily like the idea of not being able to control money. But I would say overall, it's a mix of these things. Not understanding money, wanting to control money, and just being risk averse on what they think is risky.
Okay, well, thanks. I think that's probably a good point for us to wrap up with. So folks, my guest this week has been Samson Mow. Samson, thanks so much for your time and your insights.
Yeah, thanks, Bob. It's been fun.
And thank you, everyone, for tuning in. We'll see you next time.
This concludes another episode of InFi, The Future of Finance, with Dr. Robert Murphy. The information provided is for educational purposes and does not constitute financial advice. Consult with qualified professionals before making any financial or investment decisions. For more information on the host and for previous episodes, visit InFi, thefutureoffinance.io. Thanks for listening.